In the last 72 hours, Apple Inc. has dominated the headlines with a major regulatory development in Europe. The European Union is reportedly set to approve Apple's recent App Store rule changes, sparing the tech giant from hefty daily fines under the new Digital Markets Act. This news, broken by Reuters, highlights Apple's compliance efforts and has drawn widespread attention from tech media and analysts. The focus of discussion is Apple's App Store policies and their impact on developers. However, there have been no significant product launches or AI feature announcements reported for Apple in the last 72 hours. The media's attention remained on regulatory and policy news rather than on new hardware or software. Also, no major business strategy shifts or executive leadership announcements emerged from Apple in this period. On the financial front, analysts maintained a generally positive stance on Apple ahead of its upcoming earnings. Morgan Stanley, for instance, reiterated an overweight rating on Apple, expressing confidence in the stock going into the quarter. While Apple's projections are improving, analysts noted some lingering concerns, such as the need for clarity on AI strategy. In terms of legal and regulatory developments, Apple's biggest development was on the regulatory front. The European Commission is likely to accept Apple's App Store policy changes, which Apple implemented to comply with the EU's Digital Markets Act and avoid fines. This means Apple will allow more payment alternatives for apps and has averted daily fines that could have been as high as $50 million per day. Moving on to Microsoft Corp. The company saw extensive media coverage of a cybersecurity incident. Reports revealed that a sweeping hack exploiting a previously unknown SharePoint software vulnerability hit about 100 organizations, including government agencies, via Microsoft's server software. This zero-day cyber espionage campaign was widely reported by Reuters and others, noting that most victims were in the US and Germany. No major product launches or AI feature rollouts were announced by Microsoft in the last 72 hours. The company did not introduce new hardware or consumer software in this window. However, Microsoft's ongoing AI initiatives remained part of the conversation in context. In terms of business strategy, there were no major corporate strategy shifts or leadership announcements from Microsoft in this period. The media focus for Microsoft was instead on how the company is managing the fallout of the cyber incident. Analysts remain bullish on Microsoft, frequently citing its strength in cloud computing and AI. With Microsoft's earnings on the horizon, market commentators noted that explosive AI and cloud growth have propelled the stock and that analysts expect this momentum to continue. Lastly, Tesla Inc. attracted intense media coverage over the past 72 hours, centered on signs of slowing demand and upcoming earnings. One report showed Tesla's electric vehicle sales in California have fallen for 7 consecutive quarters. Registrations in California dropped 21% in Q2 year-on-year, a statistic widely cited from industry data. Another major theme was Tesla's profit drivers. A detailed report revealed that Tesla's lucrative revenue from environmental regulatory credits is set to dry up due to recent U.S. policy changes. No new product launches or software feature updates were announced by Tesla during the last 72 hours. Observers are questioning Musk's focus, as he recently founded a new political entity, prompting concerns that his political foray could distract from Tesla's business. On the legal front, Tesla saw a noteworthy legal resolution. The company settled a long-running lawsuit in Louisiana over the state's ban on direct-to-consumer car sales. In the auto industry, policy changes in Washington are reshaping the EV landscape. A recent law will eliminate fines for automakers that miss fuel economy targets, undercutting the market for emissions credits that companies like Tesla sell. This essentially advantages legacy automakers. Additionally, a separate change is the accelerated phase-out of the federal $7,500 EV tax credit. Competition-wise, Tesla is no longer the only game in town. Rivals from both Detroit and Silicon Valley are ramping up EV production.